Hello everyone, it's Mozart here. Well, here we are again, another red day. Bitcoin has dropped quite a bit. From its peak, over 13%. I've adjusted the entry points. Well, as you can see, at least as of today, it was not in vain that I did it. That is, it bought off yesterday, but today it continues to fall due to inertia. Now let's look at what happens next and where, in general, we can expect a reversal. I've adjusted my positions on Ethereum as well. I bought in there too, but there's a pretty high chance that the candle will close below the stop. So, from what I can see right now, I'm not going to close manually until at least the end of the day. Until the candle closes. Let's see how all this plays out. But it might be that I'll have to exit at the stop here after all. If we look at Ethereum, this reversal pattern has played out according to the bodies. It's worked out quite well, and if we're looking at the shadows, if we go really, really deep into it, then you definitely shouldn't be doing that. That's at 2800, where we could see a reversal into a global bear market. In general, a reversal into a global bear market for Ethereum would happen if it settles below these lows. We definitely can't go down that route. So, what's my trading plan right now? If I hit my stop here, I'll re-enter, and at this point, there'll be a combination of moving averages that will likely hold the price, at least for a bounce. Let's get back to Bitcoin. The drop is quite severe. The drop is really severe. Overall, I expected it to happen. I talked about it, recorded the last 2 videos about it, but to be honest, I didn't think it would be this strong. So, on Wednesday, Powell made some pretty significant adjustments to the crypto market. First of all, he mentioned that they plan to have just 2 rate cuts next year, instead of the 4 that the market was expecting. A rate cut by 0.25. That's the first thing. Secondly, he said that we really don't know anything about Bitcoin, haven't heard anything, and don't want to change the laws to add it to the balance sheet. That, of course, has really shaken up the crypto market as well. That's the second point. And thirdly, we've now got this shutdown on top of everything. Republicans disagree. End 2018. And now even some Republicans can't agree with other Republicans about extending the government's operations. The last time this happened was at the end of 2018. Back then, that situation also had a negative impact on the markets. So, these are 3 bad factors that have come together. It was hard to predict that everything would go this way, and now we need to base our decisions on what has already happened and rely on the technical picture. So, Bitcoin is currently priced at around 93,500. Could it go lower? It might. Where to? So, we've taken that liquidity out. The nearest level, the nearest strong level, here it is, $90,000 to $92,500 to $93,000. This range of $3,000. You can come here. We'll see this block. So, 90 to 93. It might even go lower. Right, we need to keep an eye on that. And here's the 50-day moving average. I'm looking at the daily chart. The daily chart. You can test that as well. Overall, such situations have happened, not often, but they have. When 3 negative factors come together, it can lead to something unpleasant. What's happening on the 4-hour chart? The drop on the 4-hour chart is quite interesting. It's not vertical. The most important thing is that it comes with corrections. Right. Comes with corrections. That is, when there is a fall with corrections, a divergence, a discrepancy is drawn within the day, and some weakness accumulates. Any movement, but it might be visible on the hourly chart, for example. Yes, we're already drawing a pronounced convergence on the RSI on the hourly time frame, but not on the MACD yet. We could still update the low on the MACD, but the RSI is already suggesting a bounce. Now, based on what's happening, we haven't touched the 200 moving average on the 4-hour chart before this. Yesterday, we talked about it in the video, and now we've broken through it, consolidated, and moved below. We talked about it in the video yesterday, and now we've broken through it, consolidated, and moved below. So, such situations haven't happened often. Our 4-hour RSI has dropped to 23 to 24. Well, the last time something like this happened was, I think, around October. We had something similar. Yeah, It was right here. I think it was around the beginning of October when Iran and Israel were messing about. There was probably a similar picture. So, here, we fell below the height of the moving average, consolidated, dropped down, and then quickly bounced back up. That is, right now, approximately this option would probably be the best for the price, because if we fall somewhere, here, even show a rebound, here, and then go further down, then overall it will not be very good. So, there will be huge risks. It would be nice right now, and what I'm expecting more is some final candles with a sharp return to the 200 moving average. In this case, at least to the marks of 98,000. 97 to 98, maybe even closer to 100. Back up there. The maximum, the furthest we can stroll, is right over here. These are the levels. Here's the monthly S3 pivot. We can go as far as here. Here we've got the pivot, and S3, all the boundaries of the internal corridor. That's roughly $87, $88, $89,000. That's if things go really badly, just to stroll in there with a squeeze. We can't go lower, that's it. If we drop below this level, down here, that's a market shift to bearish. Well, that's right according to the technicals and the weekly charts, and across many dive frames. But, to just shoot straight up there, even without a correction, considering we've already dropped about 14%, well, that's a bit tricky. It's a bit tricky. You can see that this movement is starting to gradually fade away. That was about Bitcoin. Now, about the altcoins. The altcoin market has really taken a hit. So, it really took a nosedive. Overall, we're down about 25 to 26% on total 3, which is not great, and it's not looking too good. I was expecting a retest of the trillion, and we did get that retest. But all these three factors that piled on top have pushed the altcoins significantly lower. Now, we need to keep an eye on the altcoins, first and foremost. This is total 3. The market cap without Bitcoin and Ethereum looks risky right now. To be honest, it looks pretty bad at the moment. You can't say that it will stay like this. We need to wait for the week to close, because it might close and come back here, to the trillion at the close. Well, who knows? I don't know what's going to happen there. Problems will be solved. We can't predict that. What's important here? What's important, first and foremost, is to wait for the week to close. At the very least, it would be nice if the week closed. That would be really good. Above this low, that is, above the mark of $930 billion. But if we close below it, below the mark of $930 billion, we'll need to see what happens next. Because there will still be a retest later on. A retest will happen one way or another, but we could just return to $1 trillion. And from there, we could head down. If we close roughly here. Because in this case, we're covering a very strong candle. A very strong December candle from the beginning of December, on a massive volume. This is a complete engulfing. That would be bad, and that's extremely undesirable. Extremely undesirable. Let's see how the week closes. If it closes like that, then when it bounces back to $1 trillion, I'll sell off all my midterm positions. Where I am now, of course, well, I've also taken a hit on profit. So, from some peak profit, I'm now down about 50 to 60%. But I'm not at a loss in terms of profit. If you followed me exactly, you should have the same. And if you repeated exactly after me, you should have the same thing. Moving on. Regarding altcoins, where else can we drop to on total 3? Well, in principle, we can retest this white channel, which means we could drop a bit lower from the current levels, about another 4% down, and then bounce back sharply. But we really can't leave it like this because it's already a huge risk. And total 3 on the 4-hour chart here is also showing a steep drop, with corrections, so we have 1, 2, 3, 4, 5, this drop. And this last candle seems to be the final one. It looks like the final candle, marking the maximum length of the 5th wave. And this last candle seems to be the final one. It seems like the final candle, marking the maximum length of the 5th wave. Which, in theory, it would be time to buy back, because quite a lot, Quite a lot have dropped below the 200 moving average, below the 4-hour one, and now it looks very dangerous. We need to at least retest that trillion I mentioned, and then make a decision on what to do when we retest the trillion. There's a possibility that we could drop down significantly below the current levels. Just going straight down, 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 right down there without any bounces or corrections, and close all these gaps. Initially, the movement after Trump's victory is minimal because there haven't been any drops in the spring, which is not what it was like back on August 5th. Although, to be fair, if you look at the 4-hour chart from August, there were corrections then too. 1, 2, 3, 4, 5, 6, 7. Yeah. But the market was different in August. In August, the market was weaker. We were hanging around either below the moving averages or above them. There was very little liquidity in the system. Right now, there's a lot more liquidity in the system. And many altcoins on the weekly charts have shown critical values according to their indicators, meaning they've transitioned into a bull market based on those indicators. Right now, there's a really strong correction happening. The market for altcoins is getting absolutely hammered in all directions. First, they wiped out all the shorts, and now they're clearing out all the longs. The same thing can be seen simply on TotalTree. This throw above 80 on RSI, that is, this is how, as a rule, the first wave of the bull market begins. They simply gave a very strong correction. Well, they gave an extremely strong correction, but that's how the first wave begins. Right now, if nothing terrible happens from here on out, if they come to an agreement on the shutdown and manage to push through the strategic reserve, and the Fed comes out with some news about it, we could see a quick rebound. So, those are the kinds of targets. On the daily chart, TotalTree is already testing the 50 moving average. We're really breaking through it now. The 50 moving average, the 100 moving average is below. The likelihood of heading there straight away isn't very high, but I won't rule it out. Here's the support block. You can see it clearly. 850. We could head that way. By the way, while I'm recording this video, everything just keeps plummeting. Bitcoin's also plummeting. Not by much, so it's taking the dominance. You can see it on the 5-minute chart. We've started to see some liquidations. Look at those big candles at 6,200 in the 1-minute chart. Yeah, that dominance is being taken. And TotalTree is also dropping. Yeah, well, here it is, the reversal pattern. You can even see it on the 5-minute chart. And this is already hinting at a bounce back for the upcoming one. So, the worst thing you can do right now is probably to close out at a loss. I'm talking about medium-term positions. Closing all those positions at a loss, that's probably the worst thing you can do. In panic, in fear. Unless, of course, you've got massive leverage and no liquidation points. Because, at the very least, there's going to be a really strong bounce back. After such a rise and such a drop, there's going to be a really strong bounce back. Overall, because Bitcoin's dominance. If we look at the daily chart, it has bounced back really strongly, and is at a critical turning point in the trend. So, usually from here, you get a correction from 70 on the RSI, especially after such a drop. After such a drop, a deeper correction usually follows. The cut is really strong, both in terms of dominance and in altcoins, but that happens really rarely. Massive volatility. A massive reduction in positions across the board. On shorts, on longs. And, accordingly, there's a massive reduction in open interest. So, the market is really getting cleaned out, I'd say. So, purely from a technical analysis standpoint, what I can say right now is that I've pointed out some potential correction points, both for Bitcoin and for TotalTree. Yeah. You can wait for a touch of that white channel, somewhere around $830 billion, and then just watch what happens, and the week's closing, after which, make a decision based on short-term longs. I apologize, I meant medium-term longs. And that was the first part of what I wanted to say. Next, in the second part, we'll take a look at what's happening in the blockchain, how much panic there is, and how it all looks in the context of macro analysis. So, what's going on with the blockchain? The liquidation of quantities is proceeding at a fairly high density. That is, the hourly cut is directly at its maximum. So, we can clearly see this from the liquidation spikes. Here, there's clean money in the mix. This is the liquidation chart for Bitcoin, showing over $100 million. The density of liquidations has been quite sustained over the course of a day. Well, considering Trump's start, his victory right here, these are the highest liquidations since the beginning of this whole movement. Plus high density. If we look at how these liquidation densities are worked out, then, as a rule, it is something similar. Either an immediate bounce, or they push it down a bit further with a small additional drop. Right now, it's basically already happening. This is an additional drop, after which there's a strong bounce or a continuation of the movement. But in this case, considering the strength of the drop, it's more likely to resemble a bounce. The same thing. First spill, then divergence. With the indicator 2 green peaks. The strength of the liquidations is lower, and we're heading for a reversal. The liquidation is still strong, and we're heading for a reversal. Well, it's quite clear how this works, but the liquidation is strong. Just looking at Bitcoin, if we look at it more broadly, yes, of course, there were bigger liquidations. So, the liquidation on the 5th of August was bigger. Like this, for example. Just like that. There were short liquidations here, and now we've moved on to long liquidations. This is just a wild chop since the beginning of December that's happening right now. Down, up, they've wiped everyone out. Earlier, it was all about the longs, specifically the long liquidations on the 5th of August, and something similar happened at the start of July. That's it. Moving on. I've been looking at this for 6 months. Over the year, if you take a look. Well, yes, March over the year. So, that was March. There was a traffic stop, but there were 2 waves of growth. In March, there's only one event, altcoins, 2 waves of growth in altcoins. And after the first one, there wasn't such a deep correction as there is now. There wasn't. Yeah, these are the ones from March and April. About Iran and Israel. But overall, the liquidation is serious. Next. The number of transfers into losses by short-term holders is also reaching its peaks. Just like that. If we take a look, these dips often coincided either with a rebound or a shift into a new market. And I'm looking at everything since March. Looked since March. Right now, we're also approaching these values, meaning we're at a turning point, both technically and in terms of macro data. Next, the percentage of profitable offers, even as of yesterday when the price of Bitcoin was 97,600, has already dropped to 89%. If we look at it long term, today it's even lower, of course. It's already at 86%, 87%. If we look at it more long term, where? So, over the course of a year, you can even look at everything. The zone of 95% in previous markets is considered protective. And it's often considered protective. Yeah, we can drop out of it lower. I mean, we fell here in 2021. We dropped below, but roughly to the same levels we're at now, not much lower. 91, 87% hasn't been seen again. Same for 2024, reaching 89.7. The March drop was at its peak just before a massive rebound, and then we move into this prolonged sideways trend, a long bear market. Local, not global, but local. Next, the funding has been offloaded. So, we've actually hit the support line. We're bumping up against it on some exchanges, and it's already negative. Here's the funding support line. So, we've reached the lowest point of the current market funding. That's it. There's nowhere left to drop. Or we could head into a bear market again. So, accordingly, the first loss for all holders is on average up to 1 month of Bitcoin. As of yesterday, it was down by 2%, and today I reckon it's already down by 6 to 7%. And again, if we look at the long term,
how this has worked, in regular markets, they rarely go into loss. Such holders, here there was a transition to a loss. It was March 2021. We can see it's rare for all this movement, and the price doesn't stay long in the loss zone for short-term traders in previous markets, with a quick rebound in 2021 and 2017. Yeah, there were dips, but the liquidity was different then, although overall it didn't linger for a long time. After the drop, there was a sharp rebound, but the liquidity was different, so you can't compare. It's better to compare with 2021 if you're going to compare with other cycles. According to the indicators, we're approaching some sort of turning point, or a strong rebound. Because to drop from an all-time high like that and keep falling without stopping is just not possible. We're also approaching some sort of turning point here, or at the very least, a strong rebound. Because to drop from an all-time high like that so drastically and keep falling without stopping is just impossible. There's just a huge amount of money here in the form of supports. And a significant amount of open interest has already been reduced. I expect some sort of rebound from the range I've marked out. We nearly hit 92,600, slightly short. From this range, I'm expecting something around 90 to 92,600, maybe 93. Essentially, a bounce is possible. Watch volumes. We might reach my entry point, then observe the white channel retest. A solid volume retest might let us re-enter and break the blue channel. Then, we might see the correction end, or face prolonged chop. In principle, we could bounce back from here, but we need to keep an eye on the volumes. I reckon we could go up to my entry point at the very least, and then see what happens with the retest of this white channel. If it's a solid volume retest, we could get back into the channel, maybe even break through the upper boundary of this blue descending channel. Then, in principle, we could expect that the correction is over, and we might see something like that. Or we could end up in some sort of prolonged chop, right? And for now, that's all I wanted to say. There you go. That's it. Technicals and blockchain. Further updates will be in the Telegram channel. That's it. Thank you all for your attention. This was Mozart signing off, and goodbye everyone.